I just want to confirm that you can hear me. Can you guys hear me? Can I get a thumbs up if you guys can hear me? Okay, cool. So I have started recording this session. So that everyone know that the session is. I'll just give it 2 more minutes and then we'll start at 12 o'clock on the dot. Okay, let's start. So my name is Caroline Hungwe, and I am based in Pretoria. It's because I was not saying anything. I was just waiting for 12 o'clock so that we can all start. But if you can confirm for me that you can hear me now, Amber. As I was saying, my name is Caroline and I am based in Pretoria, and I'm going to be taking you guys for your master class. So we've got the first session today where I just want us to do learning unit 1, and then we'll have a longer session, I think, on Wednesday evening from 6 up until 8. That's when we'll do learning unit 2, and then we can also just have a question and answer session after that, if that works for everyone. So I hope this class is going to be useful to all, and maybe you'll be able to get clarity on specific topics or items that you do not have clarity on, as well as prepare better for your test 1. So if you have any questions during the session, because I'll be sharing my screen, I might not necessarily be able to hear you. So please just note to read them. So please just note questions down, and then maybe after every 20 minutes or after every concept, we can open the platform to questions. If that's okay. Can we start? So I've decided that for this session, we're going to go through the main test for 2024, which is test. I think going through a past exam paper will allow us to kind of focus on the key points in terms of how the questions are going to be asked in your test one. I always say that it's important to understand your learning outcomes because your learning outcomes kind of give you a guide of what you need to read on or what you need to prepare for the sake of the test. So these are the learning outcomes for learning unit one up until two. So I'm going to go through question one and question two. Question one is theoretic, and then Q2 is on the calculation of AVA, economic value added, and then we'll finish off the paper in the next session. So um I do believe that you guys are able to download the question, but I hope that me displaying it will provide more context. But if you could just, if you do have access right now to another device, you can just download the paper from your SharePoint, and then you can also just have reference as opposed to just seeing how I present it on screen. So we're going to be doing the 2024 test one. And I'm going to be displaying it here. So you'll find that first on your paper is the test outcomes. Like I said, these test outcomes help you to prepare for your test because you should be able to answer each of these questions in order for you to actually complete the question paper. So question one, which was a 10-mark question, was on the theoretic part of chapter one, learning unit one. You've been appointed as the new investment manager for Supreme Investment and will also oversee training for the newly appointed graduates at the company. You have been drafting a training manual, which will be issued to the graduates during the seminar and which they will use for study purpose in their accreditation exams. So this was a 10-mark question, and they required you firstly to define the term money markets and discuss what role they play in the financial market. And then the second part, besides the national creditor regulator, name and describe the role of two other regulatory bodies whose regulations Supreme Investments would need to abide by. So that was what question one looked like. I am going to, I don't know if you guys need time to read through the question yourself before we can start. So the term money markets, if you go into your textbook, or in learning unit one, we did speak on financial markets, and two financial markets were stated in the textbook. The first being the capital markets, which deals with the stock exchange, the stock market, where we trade shares for listed companies, and the bond markets, where bonds are traded. And then they also spoke about the money market, which is highly liquid and mainly focuses on short-term financing instruments. So this question was a 5-mark question. That means you were expected to come up with a solution that would reward you 5 marks. And at the level that you are in, you're not expected to give answers in verbatim where you have to recall if every single word stated in your textbook. However, there are important keywords that should be found in your definition. So the money market is highly liquid, which focuses on short-term instruments. So I'm not going to write the definition. I think what I'm going to give you is the keywords that you would have been expected to include in your definitions in order for you to score the full 5 marks. So the first an important point of money market is that it is highly liquid. It is for short-term instruments. It is accommodative to individuals or businesses. and who want to borrow or lend cash for less than a year. So for you to be able to have scored these marks, you needed to clearly highlight that the money market is a short-term instrument, and to also then give the time frame to what you define short-term for a period less than a year. It allows individuals, businesses, or governments who wish to either invest or borrow market. So it's a two-way. You can either invest or you can borrow markets. You can borrow from that specific market, and um, you also needed to outline that the borrowing and the investing of money is managed by a financial institution, because there are specific financial institutions such as the bank or brokerage companies that allow for this brokerage companies that kind of allow for the trading of these short-term instruments. So, like I said, you're not expected to give word for word what is in the textbook, but if you see in your textbook, there is a paragraph that actually speaks on the money market. So I would expect that in the preparation of your test one, you should be able to define the money market, to define the capital markets, and in other instances, be able to compare both the money market and the financial market, and state the differences. And just when you study or when you prepare for these questions, pay more attention to understanding the keywords, and then you can give the answer in your own words, but without disregarding the keywords, because the keywords are the ones that show the assessor that you actually know what the answer is or what it is that you are talking about. So you were supposed to write 5 marks, define speak on the players of that specific market, can be individual businesses or the government, speak about the time period of this instrument, that it is short term and is usually borrowed for less than a year. And then also speak on why people or why players use the financial, sorry, the money markets to invest either excess funds or to borrow and use that money to benefit them in the short term. Talk about who facilitates the trading of these instruments, that being either a financial institution, that could be a bank, or they're actually brokerage companies that specifically focus on trading money market instruments. And I think if you had included those 5 factors, you would have been able to score your full 5 marks. Always remember that the amount of marks given to a question kind of gives you a guide in terms of how much you need to actually write on that specific question. I'm going to open the floor to any questions. I just see now the recording, I will have to share the link, and then hopefully they can be posted by your different lecturers. As soon as I'm done, I'm going to record the link. I'm going to forward the link to the lecturers, and then they can upload it. So you should be able to access it from your ARC. Is there anyone else that has got any questions? I'm going to give 4 minutes for questions so that we can move on to the next part of the question. You can speak, you can unmute your mic and speak, or otherwise you can also just send the question on the chat. Thumbs up if there are no questions so that I can also move forward. Okay, thank you for the thumbs up. I'm going to move on to the second part of the question. Besides the National Credit Regulator, NCR, name and describe the roles of 2 other regulatory bodies whose regulations Supreme Investments would need to abide by. So they wanted you to speak on the regulatory boards that manage or that regulate the activities of financial institutions, right? So we've got, firstly, I'm not sure if you had covered this, but I'm going to give you the three regulatory boards. If you had not covered it in class, hopefully that this would be useful. So the first board would be the Reserve Bank, which is the South African Reserve Bank. So the Reserve Bank, so it's a 5-mark question for you to identify two regulatory boards and describe their roles. That means those 5 marks are split 2.5 marks for one board, the other 2.5 marks for one board. So you'd have gotten half a mark for you being able to identify the board, and then the 2 marks being you defining the role that these boards play in financial companies or in financial institutions. So the first one would have been the South African Reserve Bank. The South African Reserve Bank is responsible first for the formulation and the implementation of the monetary policy. Going to write that out, formulation and which is the responsibility of the Reserve Bank to formulate and implement monetary policies. And monetary policies is what guides financial institutions in terms of how they trade their instruments, what rates do they use, what they need to do and what they do not need to do. And then it also supervises the banking system. Supervises the banking system, supervises the supply and the demand of money, and it also provides funds, because the Reserve Bank also trades in a market that is also acts as a lender to the government and to financial institutions funding. So that would have been the first part. So you're supposed to identify, that is to name the board or the institution, and then to also then name its function. And then the second institution would have been the Financial Sector Conduct Authority, Financial Conduct Authority. So this is responsible for the supervision, again, financial institutions, supervises financial institutions and manages customer treatment and promotes financial literacy and provides educational programs. Okay, so these financial institutions, as stated in your textbook, on page 13 of the old textbook, I'm not sure with the 2026 textbook where you'd find it, but they actually told you that the regulation of financial institutions is guided by Financial Sector Conduct Authority, National Creditor Regulator, South African Reserve Bank, and the Prudential Authority, PA. So that means you need to go and just revisit that learning unit, because they tell us the relationship between financial institutions and markets. They speak on the financial institutions. They speak on the types of financial institutions: depository institution, contractual, and investment, and then the regulators. So please do not disregard. I know that it's theoretic and there's just a lot of information on it, but with Learning Unit 1, please go and spend some time on the first few pages and read on the theoretic aspect of the learning unit, because then there is an expectation that you'll get at least a 10-mark question that speaks on those financial markets, capital market, money market, financial institutions, how they are regulated, etc. So you should be able to define to identify, to name, and to describe the roles of these different institutions. I am going to give you guys a platform again to ask questions if you have any. Any questions? Thumbs up if you don't have any questions. I need at least 4 thumbs up before we can move forward. I did just see one. Okay, amazing. So I know the theoretic part might feel boring, but we need to do what we need to do. So, like I said, just going to spend some time, just going to speak on the different questions that can come out in test one. For example, the roles of the financial manager and the decisions that they are responsible for, financial planning and analysis, investment decisions, and financing decisions. So you should be able to identify the roles of the financial managers and describe at least each of them, right? And then we also spoke about the difference between profit maximization and wealth maximization. Very important for you to know how to differentiate between those two terms in case that is asked to you. And then, like we just discussed, knowing financial markets, your capital market and your money market, knowing financial institutions and the types of financial institutions, your depository, your contractual, and your investment institutions. And then, like the question we just covered now, being able to understand who regulates the financial institutions. That means identifying the regulator and giving a brief description of the roles that they play in this regulation. And I think that's to the most of what you need to know for the theoretic part of learning unit 1. Okay, so now I want us to move on to the calculations for learning unit 1, which is question 2. So question 2 was a 10-mark question as well. So the bigger part of the question was actually time value of money, which we'll cover in the longer session on Wednesday. So question 2 said, you've been provided with the following information relating to the Legendary Limited for the year ended 31 December 2022 and 2023. So they gave you the different years, 2022 and 2023. I'm just going to go here. Revenue, which is yourselves, 8 million and 9,500,000. Profit before tax, 750,000 and 680,000. And they also provided you with an extract from the financial statement of financial position, where we've got our equity and we've got our interest-bearing loans. The additional information, taxation for both years is 27%. I encourage you to always pay attention to this taxation because remember that taxation rate has changed over the years. So don't always automatically assume that it's going to be 28% or it's going to be 27%. Check the question and make sure that you are using the correct taxation rate. Otherwise, you'll lose a lot of marks just by making that simple mistake of reading the taxation rate incorrectly. The weighted average cost of capital is a third of the tax rate percentage. At the end of 2020 and 2023, Legendary incurred 440,000 each year in a marketing campaign to boost the sale of a new product that it had launched. The company is expected to derive economic benefit evenly over the next 4 years, starting from the beginning of the year, following the year in which the expenditure was incurred. We're going to discuss about this just now. And then included with profit after tax is the following: depreciation, 300,000 for each year, in interest expense of 120,000 for 2022 and 87,500 for 2023. Credit losses of 60,000 in 2022 and an improvement on the 2022 figure by 15,000 in 2023. Salesman commission of 250,000 in 2022 an increase of 10% on the figure in 2023, and the question required you to calculate your economic value added. Cool. So I think we want to work firstly from the formula, and then we got that. Remember, there are two types of formulas for your economic value added, right? The first formula is, I'll write it, formula 1 would be AVA is equal to NOPAT, which is your net operating profit after tax, subtracted by your brackets, invested capital multiplied by your weighted average cost of capital. And then the second formula, which would be your formula 2, is AVA is equal to invested capital multiplied by your brackets, return on invested capital minus weighted average cost of capital, right? So these two formulas are what exists for our AVA. And when you have two formulas, how you determine which formula you use is based off the provided information, right? So for us to be able to use the formula in red, we need to be able to have our net operating profit after tax, our invested capital, and our weighted average cost of capital. And for us to be able to use the second formula, we need to have also our invested capital, but we don't have our net operating profit. Instead, we have our return on invested capital and our weighted average cost of capital. So between these two formulas, the difference is either we've got the NOPAT or we've got the return on invested capital. And that is the first thing you need to do with the calculations. Also, do not make an assumption of what formula you're going to use. You need to determine that formula by elimination basis. So if we look at our question, we do not have any information on the return on invested capital, and therefore we need to use formula 1 because yes, we can calculate our NOPAT based off the profit before tax, and we can also calculate our invested capital based off the extract of the statement of financial position. So once we have determined that this is the formula that we use, then we understand that for us to be able to use that formula, we need to have our NOPAT, we need to have our invested capital, and we need to have our weighted average cost of capital. So let's start with the calculation of our NOPAT. Also take note that we are only calculating for the AVA for 2023 as per our questions. So you need to be very careful. A lot of tricks will be put in your test. They can give you information for 3 years, but you need to read the question and understand what does the question want me to calculate. In this instance, the question wants you to calculate specifically for 2023. So we're going to come in, we're going to label that this is a calculation for our 2023. Cool. So for us to be able to calculate NOPAT, it is net operating profit after tax. That means we need to take our profit before tax, deduct the tax expense, and then we've got our net profit after tax. And then we check on whether we've got any interest expense or not. And then we also amortize our market and research, but we'll get to that. So firstly, let's start with the information that we have. We've got our profit before tax, which is specified here in the question. That's where we always start. For 2023, 680,000. Don't find yourself using 750 because you just didn't read the question. So we start from our profit before tax in all instances. But we need to understand that when you calculate NOPAT, it is net operating profit after tax. That means we need to first then deduct our tax expense. Our taxation rate is 27%. Okay. So I'm just going to go into my calculator and I'm going to say 27% multiplied by 680,000. That gives me 183,600. Right? So this then becomes our profit after tax. Minus 680, which is 469,000. Sorry, 496,400. I don't know if you have any questions up to this point in terms of understanding that we need to use our profit after tax. So the first thing we need to do is check, and always check, because it is not in all instances, sorry, it is not in all instances that this will be your profit before tax. This could be your profit after tax. So do not then go ahead and deduct a tax expense if you've already been given your profit after tax. So we first check whether this is our profit before tax or if it's our profit after tax. In this instance, it was before tax. So we then had to calculate the actual profit after taxation. But sometimes the question might be different and they actually then just provide you with the profit after tax, and there is no calculation that needs to occur in terms of deducting the tax expense. Cool. Once you have our profit after tax, then we can start adjusting for the items that we need to deduct from our NOPAT. So remember, NOPAT as a concept is saying that a business can make a profit or a loss, right? But we want to adjust for items that are not part of the operations of a business. So there are specific expenses that need to be added back because they do not form part of the operating profits, and specific expenses that need to be deducted because they do form part of our operating profit, but will not include it in our profit before tax. So the first thing I want us to speak on is our interest expense, right? So we need to adjust for our interest expense, but we adjust for our interest expense after taxation because we've already included the tax expense. So we come here and we take our interest expense, which would be given in the question. So if we scroll down, we will see that there was an interest expense here on this note. There was an interest expense of 120,000 in 2022 and 87,500 in 2023. So we are dealing with the interest, the NOPAT for 2023. So we're going to be using 87,500. That is our interest expense. So we are adding back our interest expense because the cost of capital has already been included in our work in the formula. So if we include interest expense in our NOPAT, then we've double affected the interest aspect in our formula. I'll explain. When you speak of weighted average cost of capital, we are talking about the cost of borrowing or the cost of the shareholders investing money into our business. So we already include the cost of capital, which is the interest expense, in our formula. That's why we have to deduct it in the net operating profit after tax, because it has already been accounted for in our weighted average cost of capital. I do not know if that makes sense. Do you want me to further explain that, or we're good? A thumbs up if we're good. If not, just let me know, then I can explain it again. We're good. Amazing. So we first add back our interest expense, but we need to add it back adjusted for tax because the tax effect had already been taken into account in our tax expense. So when you subtracted this tax expense, the tax on the interest expense was also included. Therefore, we need to deduct it. Otherwise, we'd have added it twice. So that's going to be 1 minus 1 minus 0.27 because our tax rate is 27%. And I'll repeat again, just remember that the tax rate has changed to 28%. So be on the lookout to understand exactly which tax rate your question has asked you to use. So our new interest expense that we're going to add back becomes 63,875. Please make sure that you always show your calculations in your solutions because you could miss the final answer, but if you show your calculations, you'll be able to get marks for specific calculations that you'd have done correctly. So make sure that you always show your calculations when you answer these questions, right? Once we've added our interest expense, the next thing that we need to look at is the next thing that we need to look at is the note 3 that speaks on the marketing expense. So we are told that at the end of 2020 and 2023, Legendary incurred 440,000 each year in a marketing campaign to boost the sales of new products that it had launched. The company is expected to derive economic benefit evenly from the expenditure over the next 4 years, starting from the beginning of the year following the year in which, starting from the beginning of the year following the year in which the expenditure was incurred. So in 2020, we incurred 440, right? Just going to come and do the calculations here, right? So in 2020, we incurred an expense that was 440,000. And the economic benefits for this expenditure will be evenly distributed in the year following the year. That means in 2021, 2022, 2023, and 2024. So if we say 440 divided by 4, I think we get 110. So for each of these years, there will be 110,000 that would be benefited for each year. So we are going to amortize this 440,000 in as much as it is going to be recognized in the statement of profit and loss in the year 2020, based off the accrual concept that we recognize expenses in the period in which they are incurred. But the actual benefit from that expense will be evenly distributed from 2021, 2022, 2023, and 2024. And then after that, in 2024, we are also going to incur another 440,000 Rand, except that the benefits of this 440 will be amortized in the year following the year. That means in 2025, 2026, 2027, and 2028. Each year incurring evenly 110,000. So the year that we are preparing our NOPAT is the year 2023, right? Just going to highlight this here. And then at the end of, sorry, this is at the end of 2023. That means this is 2024, 5, 6, and 7, because the 440 was incurred in 2023. So there are 2 instances in which 2023 is involved, which I've highlighted in purple. So basically we're saying that in 2023, we incurred a marketing expense of 440,000 Rand, 440,000 Rand, but the benefits of that 440,000 Rand will only be distributed in the year following. That means 2024, 5, 6, 7, and 8. That means this 440,000 Rand was deducted from this net profit, but it was not part of the operating expenses for that specific year. Why? Because the benefit of that expense has only been experienced in the following year. Therefore, the amortization of this expense does not begin in 2023. So we need to add back the marketing campaign cost, and we're going to add it back in full as 440,000 Rand. Why? Because the specific expense will only be amortized in the following year, which is 2024. That means in 2023, there was no benefits incurred from this expense, and it was not part of our operating expenses. And therefore, it needs to be added back to our operating profit because it was initially deducted. I am going to pause and I'm going to ask if there's anyone who has any questions. Thumbs up if no. Cool. And then once we add that back, we now look at the second instance in which 2023 was involved, which is the amortization of the expense incurred in 2020. Therefore, we need to then subtract amortization RMD, which is 110,000. And we are deducting it in 2023 because it was amortized across 4 years, and 2023 is part of those 4 years, but it was not included in the calculation of the profit before tax, and that is why it is being subtracted. So now that we've dealt with our marketing costs, we are now going to look at our non-cash items. So if we come here, depreciation of 300,000 each year, except that depreciation was the same for both accounting and tax purposes. In the instances that they are not the same, you need to calculate the difference and effect it in your net operating profit. That means if your accounting profit is higher than your tax profit, you need to add that back. And if your accounting profit is less than your tax profit, so if your accounting depreciation is higher than your tax depreciation, then that means you need to add that back because you're supposed to use your tax depreciation. But if your tax depreciation is the one that's higher, you need to subtract that because that means you overstated your depreciation based off the tax depreciation. And then we've got credit losses. So we've got credit losses of 80,000 in 2022, but then they improved by 15,000 in 2023. The trick here was for you to understand that when an expense improves, it means that it is less. So the improval of credit losses means that we have less credit losses than we had in the previous year, and not necessarily you adding it up. So that means you're supposed to add your non-cash items, in this case, which is your credit losses, except that the 80,000 improved. Therefore, an improval of a credit loss would be it decreasing as opposed to it increasing. And I think that was just a trick part for you guys to understand what it means when our credit losses improve. And therefore, this would have been 65,000 and not 95,000. And then once we do the math, we'd get our NOPAT as 955,275. I do not know if there is going to pause here. Okay, cool. Okay, you can all put in your questions. Would this masterclass be uploaded for us to view whenever? Yes, I will. Once I've completed the recording, I'll share it with your lecturers and then they can upload it for you. And then for my students, I'll upload it on ARC. Can you please explain again the tax depreciation part of tax purposes? Okay. So we've got depreciation, which is different in different organizations. So different organizations have different ways in which they can depreciate their assets. But then your tax depreciation is guided by SARS so that it kind of standardizes and does not allow businesses to overstate or understate their profits using incorrect depreciation measures, right? So basically, the depreciation that we need to use when we calculate our net operating profit is the depreciation for tax purposes. And so when that is different. I'll give you, for example, let's say, right? Let's say tax depreciation in this instance was 300,000. And in your accounting, depreciation was 250,000. And we say that in our operating profit, you want to use your tax depreciation. That means the amount that was deducted from this amount was understated by 50K. And therefore, we need to add it back. Because what you want to use is your tax depreciation. But if this is vice versa, and then your tax depreciation is the one that is 250, and your accounting depreciation is the one that is 300,000, that means your depreciation was overstated by 50K, and we need to subtract it. If it's overstated, oh yeah, we need to add it back to the profit, because if it's overstated by 50K, that means your profit was understated by 50K. I don't know if that provides context. I haven't seen a question where you are expected to, where the tax depreciation and the accounting depreciation was different. But I hope that this brings perspective. Just confirm, Tamsanga, yes or no. And then explain the amortization part with 2023 and 2024. Okay, cool. I'll do that again. So you're saying that if we look at the question, yeah, here, this is what we're dealing with. We're saying that there are two research and development expenses that were incurred. The first one was incurred in 2020. So the concept of this is that when we incur expenses whose benefit is experience, whose benefits is benefited over a specific period of time, we don't treat it as an expense, we treat it as an asset. Because if I'm going to pay 444,000 for marketing, but that marketing expense is going to boost my sales in the next 4 years, that means I'm going to get benefit from that expense over a period of 4 years. So I treat it almost like an asset. And an asset is depreciated over its useful life, right? So that is the concept behind amortizing our expenses, because we're saying that, okay, yes, I've paid 440 in 2020, but the benefit of this 440 is going to be realized over 4 years. So instead of me only treating it as an expense in 440, in 2020, I need to distribute its benefit over the period of 4 years, right? So in 2020, I paid 440,000, but I'm going to get the benefit over the next 4 years, starting the beginning of the year following the year. The year following 2020 is the year 2021, right? So that means in 2021, I'm going to get benefit of 110K. In 2022, I'm going to get benefit of 110K. In 2023, I'm going to get benefit of 110K. And in 2024, I'm going to get benefit of 110K, because it's in the year following the year, right? And then in 2023, I'm going to incur the very same expense of 440,000. But I'm going to start getting the benefit of this 440 from the year 2024, 110K, 2025, 110K, 2026, 110K, and 2027, 110K, right? So we have two instances. Right now we're in 2023, correct? So there are two instances in which 2023 has been mentioned, this is the first instance. I'm going to highlight that in purple, and then this is the second instance. I'm going to highlight that in purple again. Right. So I'm going to start with this 440. This 440 was incurred in 2023, but the benefit will only start from 2024. Therefore, it will only be charged to the operating profit beginning 2024, 110K each. Therefore, it should not exist in 2023. That's why I added it back, because it was not supposed to be subtracted in the first place. Right. So it will only be experienced in 2024, 5, 6, and 7. And the second part where 2023 was mentioned is, I had an expense in 2020, but there's an amortization of 110,000 in 2023, which I need to subtract. I don't know if that brings perspective, Ember, or do you want me to continue? Okay, no problem. What I'm also going to do is on Wednesday, after we finished the rest of the paper, I can do 30 minutes where those that have got questions can ask, and then I'll be happy to help. So we can also just do like a Q&A, even for questions that we didn't cover in this session. Yeah, cool. Amazing. So let's just move on to the last part. I've got a class at 1, so I need to also wrap it up quickly. So once you've calculated your NOPAT, the next thing that you need to calculate is your invested capital. So with your invested capital, you will go into your extract, which is your statement of financial position. So in your statement of financial position at the beginning of January 2023, there's an equity of 3,200,000 and there's an interest-bearing loan of 1,850,000. So I'm going to come to say this is for 2023. I'm going to have my equity of how much? 3,200,000, and then I'm going to have my interest-bearing bank loan of 1,850,000. Amazing. So that means my total invested capital would have been 5,050,000, right? The sum of these two. So you need to adjust for specific things on your invested capital. Firstly, remember, we just spoke now that we are going to be treating this 440,000 as an asset. All together. So we are going to capitalize the research and development costs. So that's the first adjustment we're going to do. We're going to add the capitalization. The concept of us capitalizing is just, I think, as I have explained that R&D cost. As I've just explained that in this instance, it's an expense, but we're saying this expense is behaving like an asset. So we want to capitalize it because we are going to get the benefit over a period of time as opposed to you getting the benefit over 1 year. It's just like how you treat your prepaid expenses as an asset, because you have paid for that expense in that year, but the economic benefit of that expense is going to be received in the forthcoming years, and therefore should be treated as an asset. That is where the concept kind of emanates from. Cool. So we want to calculate our invested capital at the end, right? Beginning, sorry. So we're going to take 440,000 and we're going to divide it by 4 years and we're going to multiply it by 2. And that is going to give us 220,000. I'm going to explain this if we don't finish, or maybe I'll give you a task to go and kind of understand why we used 220, and then that could be our starting point in the next class. I'm saying that because I see the time and I also need to go for my class. But let me just finish the question and then we'll just after this specific one. And then the other thing that you need to do is you need to add your non-cash incurred in the previous year. In this instance, which is 80,000 because it was given. So it has to be your non-cash items incurred in 2022, which is given here. I'll show you now as 80,000. And then our adjusted invested capital becomes 5,350,000. So the reason why we are using information for 2022 is because we want to calculate the changes at the beginning of the year, which is at the beginning of 2023, which would then be at the end of 2022. That is why we use 2022. And the reason why we've got 220,000 is our R&D is because I wish I hadn't deleted my amortization. Remember that 440,000 was amortized over 4 years, which was 2021, 2022, 2023, and 2024. 110, 110, 110, 110. Therefore, by the time we got to the beginning of 2023, we had already used up 220 of this 440 and only 220 was left. Hence why we've got 220 here as the remaining R&D costs to be capitalized. And the reason why we do not capitalize the 2023 cost is because it only takes into effect in the year following 2023, which is 2024, 5, 6, and 7. And therefore, we cannot recognize it in the year 2023. And then, yeah, and then once you've done that, you calculate your invested capital, and then you just come and you fit it into this formula. You already know your weighted average cost of capital is one-third of 27%, which I think would be 27 divided by 3, 9%. And then you just come and you fit in this formula. I don't know, is there anyone who's got any questions now? Especially about the capital invested and why we amortize the 220 and not the full 440. Can I get thumbs ups from everyone at least? Okay. Tamsan, I would have loved to explain again, but I have to go for my class now. It starts in 5 minutes. However, I just want to task you to go and relook at the concept again. And then when we start our next session on Wednesday, that is going to be our starting point. So I also want to give you homework to go and relook at it individually and see the concept behind it. And then when we start our next class on Wednesday, that's going to be our starting point. I'm going to revisit that topic. I know it is a bit tricky, so I'm going to just come with examples. Then we can start with that before we move into our for the rest of the question. Just as a challenge, yes, no problem. Just remind me. Yes, I'll do that. No problem. So just remind me on Wednesday. We'll finish the rest of the question. So on Wednesday, we will start from, yeah, and then we will do the actual calculation in writing. I don't have a problem with that. Please go and try to finish the rest of the paper so that you can, when you come on Wednesday, you can benefit more. But I do hope that this was very useful to some of you. Thank you so much for joining. I need to rush to class now, but I'll definitely see you guys on Wednesday. Okay.